our website and on our PPP page and on our YouTube channel. If not later today, then definitely sometime tomorrow. With that said, I would like to introduce Dave Coggins, our Executive Vice President and Chief Banking Officer at ICB, who will get things started today.
Thank you, Melissa. By the way, Melissa Schomburek is our honored moderator today, and so she's going to kind of keep the process rolling here. One of the things that we like to remind you of is that we understand the program as it's been published. We're not making any guarantees about anything. As those of you that participated in the PPP program in 2020 know, there's been a lot of guidance that evolved as the process unfolded. And fortunately, this time around, we think that's so far it has been a lot less. And but we still want to remind you that this is an SBA program, and we have to offer this disclaimer. Next slide. Some of the items that we'll be covering today, we want to give you a quick refresher on the PPP program. Many of you are probably veterans of the program from last year, but some of you are not. So we want to just kind of level set today and give you a quick refresher on it. And then we're going to talk about what's changed from 2020 to 2021. The CARES Act that authorized the first PPP program that was modified throughout the year has now been, instead of scrapping the old program, fortunately they didn't do that, they just updated it and created some additions to it for 2021. So we're going to talk about what has changed, some of the eligibility for, there are two types of PPP program now, as we'll refer to them. One is the first draw PPP loan, which is basically the old program rules, and now under new authorization to use those rules again for a first draw PPP loan. And we'll talk a little bit about what that means. And then we'll talk about what's now being referred to as second draw PPP loans and the eligibility for that. And that's essentially basically allowing companies that got a loan the first time around and are still experiencing financial difficulty. They've got, and we'll talk about how they can qualify for that, but that's a good chunk of what this new PPP program is going to be used for, is those second draw PPP loans. And then we're going to spend some time talking about the loan application process. We've, fortunately, this time around, we have a pretty slick online portal that we've used for forgiveness if you've been experienced with that already. But this time around, we have that available to you on the application process. And my colleague, Carl Spey, who we'll introduce in a bit, is going to walk you through all of that. Next slide. So let's just do a quick refresher on the 2020 version of PPP. This program was designed for small businesses and farms with less than 500 employees. The maximum loan amount the first time around was $10 million with a loan size of up to 2.5 times their average monthly payroll costs for 2019. So that determined how much you were eligible for. And payroll costs would include cash compensation, group health insurance, retirement plans, employer paid state and local taxes, and things of that nature. The funds that you were able to secure through this program had to be used during a covered period. At first, it was only 8 weeks. That was the option. And that created a lot of challenges for people to get that money spent within those 8 weeks and to have it be 60% payroll and no more than 40% for non-payroll expenses. Congress then came back with a modification that allowed a 24-week covered period, and that solved a lot of the problems that many of our borrowers had getting that money spent within the covered period. The non-payroll costs were designed to include interest on business mortgage insurance. That could be business real estate mortgages and personal property debt, rent obligations for business leases and business utilities. And there was some detail in there as far as what qualified as business utilities. The interesting thing, just as a side note, the first time around, a number of these little details were clarified as the program rolled along. So when we did this our first webinar, we gave you the best information that we had at the time, but that did change and evolve throughout the year. Fortunately, this time around, it seems like they've got that pretty well nailed down for the most part. We have very few questions that we're still trying to get clarified that people have raised along the way. And just by way of clarification, the program did first become available to us to start rolling out on the 25th of January. So we've been in process. Let's see, we're just finishing. No, am I right on that, Carl? What was the first date that we could start offering this?
January 19th.
That's
for
right.
our organization.
The 25th wasn't right. So yeah,
the 25th was for increases to existing first draw PPP loans, which we'll get into in a little bit.
Yep, I'm already getting stumped here, so bear with me. The other thing is, as I mentioned, we have to use at least 60% on eligible payroll costs, and the rest can be used on non-payroll costs. And then, as was somewhat controversial in the early going, you're required to attest to the need based on COVID-19 induced uncertainty. And so there was a lot of public consternation about what does that mean? How bad does it have to get before I can say that I qualify? And if somebody comes back and said, well, things went better than you thought, are you going to have to pay it back? There were a lot of questions. We had people saying, maybe I better give it back because they might come out and something bad could happen to me. But if you remember back in April of 2020, who knew what COVID was going to do to your business? And so it wasn't that hard to attest to the need, but that was something that created a lot of anxiety for some customers in the early going. Next slide. So what changes were made in the 2021 version now that was just passed on this and signed into law on December 27th versus the 2020 version? Well, just to clarify, what if you've been a student of this program and have studied all the online Q&A and rules put out by the SBA, you know that they basically took the 2020 version, kept most of the provisions of that intact, and then layered in the changes that were passed in the law that was signed on December 27th. So if you just kind of a version might be 4.0 by now, if you think about all the changes that were made. But we're just referring to the old program from 2020 versus the new program in 2021. There were some minor additions to eligible industries. We don't bank most of those industries. There was some electric co-ops, some certain additions to some nonprofits. There were a number of other, some broadcast and journalism type industries and so forth. So those additions weren't a big deal for us. A very important deal that many of you experience is if you got an Eidl loan and you got an Eidl loan grant up to 10 grand, you found out that when you submitted your application for forgiveness, or you learned that this was going to be the case if you hadn't done that yet, that grant was not going to be forgiven, and therefore they were going to take it out of your PPP forgiveness. Some of you might be still sitting in that spot where you haven't had that Eidl loan returned back to you, or the amount that was taken off your forgiveness. But fortunately, the SBA did now clarify that that's no longer the case, and if you did get that taken away, you'll get it back. And some of you have not received that. If you still got an Eidl grant out there because your whole loan wasn't forgiven by that, and that was the difference, that is being taken care of, and we will be notifying you when we get those funds. But if you haven't asked for forgiveness yet and applied, that will not be taken out on any forgiveness applications going forward. There was a lot of concern. Initially, the Congress said that PPP funds are not going to be taxable. That was their intent right from the start. However, the IRS about a month later came back and said, but you can't deduct the expenses. So in essence, creating a taxable event. And that created a lot of issues for accountants and their clients, trying to figure out, well, what about it? Is it deductible in 2020? Is it the year that I get the forgiveness? All that's been cleared up now. The funds are not taxable, and the expenses paid with PPP funds are tax deductible, whether you receive that's for 2020 funds and for new PPP loans now issued in 2021. A big and important change. They expanded and loosened some of the eligibility requirements for seasonal businesses. So if that's you kind of know there's a little more flexibility. You get to pick any 12-week period for your to determine eligibility. So that does give some more flexibility there. A big deal for our farm clients. If you are a 1040 Schedule F filers, basically self-employed sole proprietor farmers, the old program required you to use the net income on your Schedule F to determine how much you qualified for, and up to the $100,000 limit. So for many farms, that might have meant that they couldn't apply for the full amount, or they couldn't apply at all because they had a negative net income. Congress came back with this round and said it's now based on gross receipts for Schedule F filers only. It does not apply to Schedule C filers. This is a Schedule F issue only, but you can use those gross receipts instead of net income, and that means a lot of our farm customers that are filing 1040 Schedule Fs are able to now get a first round PPP loan. The only problem that I will say is that if you got a PPP loan and you had it forgiven already, you're not able to bump up the amount if this new rule allows you to increase it. You can't increase it and get an increased amount if you've already filed for and received forgiveness. The one thing that we don't know for sure is if you've applied for forgiveness, not received it, can we pull your application back? I don't know if we've been able to do any of that yet, Carl, but if we were able to successfully do that, that could mean that you could apply, and we will try, but we can't guarantee that we'll be successful in getting your application for forgiveness withdrawn. The loan amount can now be based on 2019 payroll or 2020 at your choice. So that's something that gives you a little more flexibility. And the list of approved payroll benefits expenses has been clarified or expanded. And I'll just mention a few of those that were, well, first of all, vision and dental insurance was unclear the first time around. In the end, they kind of came out and said no. But now in this round, those two forms of benefits have been allowed to be included in payroll expenses. You can also, well, the retirement income has always been a part of it, but those are the two main ones. And then the list of approved non-payroll expenses, still, of course, limited by the 40%, but that list has been expanded as well. And some of the things that you can now include for your non-payroll expenses would be software, various types of software, and that's itemized in the rules. Property damage costs, and I think as you read through the rule, it's kind of designed to help some of the businesses that were affected by some of the unrest that we experienced last summer. And so there were some businesses that could definitely get some benefit from that. And certain supplier costs could be used. And that was kind of, as we've seen, some disruptions in supply chains. I think that's why Congress included that. And then the last thing would be worker, the protective devices that you've had to install or buy to give to your workers to help protect against COVID. Those things have been added as an additional expense. And there's some increased flexibility in the choice of the covered period. Next slide. So a few other things. If you didn't receive a PPP loan before and you're now eligible as the rules have been revised, you're now considered a first draw PPP loan customer. What's important to note is that if you had a first round, or if you get one now under the new expanded rules and you get it spent, so you have to spend it during the covered period, then you could be eligible also if you qualify for a second round. So you can do both. The tricky thing is you got to realize that you have until March 31st to apply for either a first round or second round. So just thinking about it for a minute, if you now qualify for a first round, you get that, you spend it in an 8-week covered period, as an example, you're going to be running up against a tight timeline to get your application in for a second round PPP loan to meet the March 31st deadline. So just something to keep in mind, but you can qualify for both, but you have to deal with that deadline. One thing that we also have noted that some people are worried about, just by way of pace this time around, the mad scramble the first time that PPP loans were offered it was almost backbreaking for banks like ours trying to get through the process on behalf of their customers. Everybody was in a panic. They didn't know if the money was going to run out before they got their loan. It pretty much ran out in 14 days, which had everybody, in a real state of panic. Fortunately, it was reallocated for, and we did not run out the second time around. And there's the pace that things are going at right now. We're not expecting, the SBA is not expecting that we'll run out of money. It's likely that we'll run out of time before we run out of money this time around. And the pace and just the demeanor of our customers going through this time around is substantially different. It's much more measured, much more manageable because of the lack of the panic that we had the first time around. If you received a PPP loan in the prior program and now you qualify for an increase and you haven't applied for forgiveness yet, as I mentioned before, you now can get this first draw PPP loan. As I mentioned, the 1040 Schedule F filers, gross receipts instead of net income, the expanded payroll definition, which is the vision, life, dental insurance premiums being now included. And there's more non-payroll options. So, and then the covered period is more flexible to include somewhere between 8 and 24 weeks in 1 week increments. So you can start applying once you've spent the money for forgiveness. All the other rules regarding how long a term, what the interest rate is, 1%, and a 5-year, up to a 5-year term. If you don't get it forgiven, that you have to pay it back. All those things, you have 10 months after you've spent the money, after your covered period, to apply for forgiveness. All those rules are all the same. And the loan size and employee limits are the same as before on the first draw PPP loans. Next slide. So let's talk about second draw PPP loan eligibility. This is really what most of this round was designed to help. It's to help the businesses that got a first draw loan, got a first loan, and spent it, got it forgiven, or maybe haven't gotten it forgiven yet, but they still aren't out of the woods. They need more help. So this one has a means test attached to it, as you probably read. Basically says that you have to be able to demonstrate that at least you've had a 25% reduction in gross receipts during a relative comparison time period. So in other words, you can use calendar quarters, 2019 versus 2020, or annually 2019 versus 2020. So this is basically saying 2019 was at least 25% better than you experienced in 2020. And that can be, you just got to match up quarters, or you can use the whole year. My guess is if your year is down 25%, it's pretty easy to find a quarter in there that is down 25%. But that's an important difference this time around compared to what was present in the first round. And this one, some other changes. You can have no more than 300 employees this time compared to 500 employees the first go around. And there are some exceptions for the Nascs Code, National Industry Codes of 72, which is hospitality businesses and some eligible news organizations. The loan size is the lesser of $2 million instead of $10 million before, or your average monthly payroll cost times 2.5. So in other words, 2.5 times your monthly payroll costs, same as it was before, but it's capped at 2 million versus 10 million this time. If the business is one of those hospitality industries, it's in hotels, it's in movie theaters, it's in the restaurant and bar business, it's 3.5 times payroll costs instead of 2.5, recognizing that those industries have really been hard hit. And that's why the increase there. They also must have been in business as of February 15th of 2020. And there's a lot of other details. We're not going to get into all of them today. There's a lot of things that are clearly spelled out in the rules now that we can clarify for your specific situation. There's a lot of little things about different tax paying statuses and things like that. One thing I will say that I didn't put on the slide that's important to note is they have defined gross receipts for purposes of this particular program. And it's basically all your sales, standard stuff. And if you're a taxpayer, excuse me, whatever kind of taxpayer you are, if you're an accrual basis taxpayer, then it's your accrual sales. If you're a cash basis taxpayer, it's your cash sales. The other things that are included, it's interest and dividends, all your investment income that you've received, rents, royalties. And then the other thing that's in there is asset sales. So when you're trying to compare quarter to quarter, if you had an unusual asset sale, one in 2020 that you didn't have in 19, you need to find a quarter where that didn't happen, because those are the kind of things that you need to understand going in. But they did clearly define, unlike the first go around where things were a little foggy on certain definitions, this time they made sure that they defined those kind of things so that we know clearly how to go about calculating your loan eligibility and the amount of your reduction in gross receipts. So think of this one as a means test, basically saying you had COVID hit you hard, and you still, the first round of PPP hasn't quite gotten you over the hump yet. You need more help. That's what Congress is trying to do here. So with that, I know that might generate still some questions. I'm going to turn the microphone over to Carl Spade. He heads up our business credit department. We call him the Yoda of PPP in our bank. And he reminded me the other day when I used that term that Yoda died in the end. So we got to find a better term for him. But Carl's extremely involved in all the details of both the application for new loans, and his team has been working tirelessly throughout both phases of this program to get your applications processed on both ends, whether it's on an origination or on a forgiveness. So I'm going to turn it over to Carl, and he's going to take it from here.
We did actually have one question that came in, if you want to take that first before we switch gears.
All right, I'll do that.
The question is it still possible to apply for an EIDL grant? We did not originally apply for an EIDL grant because we thought it would be deducted from PPP forgiveness.
It's my understanding you still can. Have you heard anything to the contrary, Carl?
They have reauthorized that program, but that is a program that you would apply directly through the SBA. The banks are not involved in that.
Yep. But good point, and that it is our understanding that that's still available to you, or re-available, I guess maybe is the term. All right, thanks, Melissa.
So to talk about the processing of the applications, as Dave mentioned, we're using an online portal. It's the same software provider that we used for the forgiveness portal. So if you've been through that process, you'll use your same login credentials, and you'll be able to see both your new application and your previous forgiveness application. So the way to get to that is if you come to our homepage, which is investorscommunitybank.com, and I will mention the best experience is going to be either using Microsoft Edge or Google Chrome as your internet browser. We've seen some sporadic issues with Internet Explorer and Safari. So please use Google Chrome or Microsoft Edge. From the homepage, you saw there was the COVID-19 there's a banner across the top that'll take you to this page, or you can come to resources and it'll take you right to our paycheck protection page. This is the main page that we use to publish the information, any updates that we have. We do a really nice breakdown on the documentation that's required if you're applying for a first draw or a second draw loan. And as well, the SBA has published some documents to instruct you how to calculate your maximum eligible loan amount. Early on, back in April, we had some guidance, but some banks were calculating it differently, and there was just a lot of gray area. They've done a really nice job this time around to really drill down based on your tax filing status. How do you calculate your maximum loan that's available to you? So you can take a look at those. As I mentioned, it's the same application portal as we were using for forgiveness. So you would come here, click on Submit Your PPP application, and if you've not yet started your forgiveness process, you can click over on this left-hand side where it says Start Your Application. If you've already been through the forgiveness process, you'll know that you've created an email and a password login. So over on this right-hand side, you can pick up where you left off. If you do not remember your password, for security purposes, we do not have access to your personal information, the password that you used. You can click the Forgot Password link, and it will walk you through the steps to reset your password to get access to the application. So from here, this will be your main landing page. I've already created an application for us, so you don't have to watch me type in all of the data entry. But as I mentioned, you can toggle back and forth between your forgiveness applications and then your original applications for this next round of funding. So typically this will be blank for you, and then you would click Start a New Loan Application, and it would take you to this page. The first question that you're going to answer is that it's important for the SBA to know if you have any, what they refer to as affiliates or affiliated businesses. So if any of the owners in the applicant, or if you are an individual that's applying, if you have any other related businesses, you would have to select this yes, this drop down as yes, and then at the bottom of the page, you would fill out your affiliated business, affiliated businesses and their information. The business type drop down, this is very important because it kind of it will determine some of the other things throughout the application process. So there's a drop down here with all of the different eligible business types that are able to participate in the program. So you would simply choose the one that is applicable to your business. The EIN or Social Security number. One of the things that the SBA is requiring this time around that they didn't last time around, if you're a self-employed or a sole proprietor that files on a Schedule C or a Schedule F, but you have employees, for the first draw loans back in April and through August, the SBA didn't have a gatekeeper for what tax ID number you used. So you could apply with it either your Social Security number that's listed on your Schedule C or F or your EIN. This time around, if you have employees, it's going to require that is an EIN number. So that's important to note. Based on how you answer this dropdown, either EIN or Social Security number, that will open either the business legal name or the first and last name. So if I would choose Social Security number for a sole proprietorship, if I choose Social Security number, it would open up the first name and last name fields versus the S Corp. Obviously, an individual cannot be an S Corp, so it opens up only the business name. So the portal does a really nice job at being responsive based on how you answer the questions and the fields and the drop downs. It will walk you through which fields need to be filled out. As Dave mentioned, the NAICS code is going to be very important in your application process. Back in the first round of applications, that was not a required field, but due to this time around, the additional 3.5 times versus 2.5 times the monthly average payroll loan calculation for the businesses that start with 7.2, this is going to be a very important field that you'll need to fill out. If you're unsure of what your NAICS code is, you can simply start typing, and it will help filter down the type of industry that you're in. So, and then it will pre-fill this NAICS code for you. And if you're unsure of what that is or what that could be, it's listed on your tax return. So if you take your 2019 or if you have your 2020 tax return started, your accountant should be able to get that NAICS code for you. The date of establishment is another important field. So the SBA, we've seen some instances where the application this time around is submitted to the SBA and they're kicking it back because it doesn't match the date that they have on file. So please double check either the Wisconsin Department of Financial Institutions where you file your corporate status, or you can take a look at your articles of incorporation or organization that should have that date there. As Dave mentioned, the size standards. So for first draw loans, you have to have employees less than 500 employees. For second draw loans, you have to have less than 300 employees, which most of our borrowers fall in that category. The existing customer of lender, at this point, we are currently processing only existing customers of Investors Community Bank. So you can check that box and fill in the account number that you have with us. The address field is responsive, so much like the NAICS code field, as you type, it will kind of guess what it thinks the address is going to be, and then you can come and click on that, and then it fills in some of these fields in the background for you. Of course, business phone and email, how it's best to contact you as the applicant. The business owners, you can fill in as many business owners as you need that have ownership over 20%. For this example, I include myself as 100% owner, but if you had multiple owners, you could simply click the Add Business Owner and add additional owners as necessary. And as I mentioned on the start with the affiliated businesses, so the other, any related businesses that either the applicant or the owner of the applicant has need to be disclosed to the SBA. So you would fill in the name, the relationship, the tax ID number of the affiliated company, and then click this add a business over on the right-hand side. The loan information, this was something that some banks collected on the front end with the first draw loans back in April. The SBA is trying to gauge kind of what the expected use of proceeds are. It doesn't necessarily tie you to having to use 100% on payroll or 10% toward interest expense, but the SBA is just trying to get a good gauge of how it's anticipated that the funds will be used. These fields do have to add up to 100%, and as Dave mentioned, in order to be eligible for full forgiveness, you have to use at least 60% of the loan proceeds toward eligible payroll costs. An important field for the application process is going to be this yes or no dropdown. So this determines whether it is a first draw loan or a second draw loan. So if you've never received a PPP loan for the applicant, you would click this as no. So this would make this application for a first draw loan. However, if you already received a PPP loan and are applying for a second one under the second draw loan eligibility, the SBA does require that you provide the first PPP loan number, the loan amount, and the lender of record. So there's two different loan numbers. One is going to be your Investors Community Bank loan account number, and then there is a separate SBA PPP loan number. This field is looking for that SBA PPP number, and that's the number that you use to sign into the forgiveness application, if you're familiar with that process. One thing that our technology partner has provided is you can fill out that number and then click validate, and it will check against the tax ID number and make sure that the PPP number is correct. If you're unsure of what this is and you don't have it in your documentation, please reach out to your banker and we can provide that for you if the loan was originated through Investors Community Bank. The SBA does not require that you get the second draw loan from the same lender that you received the first draw loan from. And in some cases, we've seen customers that got their PPP loan elsewhere, or maybe they became new customers of Investors Community Bank and want to do the second draw loan through us. If the PPP loan was obtained through another lender, we do not have access. The SBA does not allow access to that PPP loan number. So you will have to contact your original bank to get that number. The next part, for the vast majority of applications, the refinancing the Eidl loan is going to be no. This only applies to first draw loans. There was a portion of time back in, I think, January and February where they were issuing Eidl loans, and there was a provision in the PPP loan program that you had to refinance that Eidl loan if it was originated in a certain time frame that had to be refinanced with the PPP loan. But like I said, most of our customers did not see that happen, and that would not be something going forward. For the second draw loan, you do have to provide the revenue, as Dave mentioned, either a quarter in 2019 compared to the same quarter in 2020. So if you're using second quarter 2019, it would be compared to the second quarter in 2020, or you can choose to use the annual period 2019 to 2020. but you do have to show at least a 25% reduction in order to be eligible for the second draw loan. The next portion is where you would calculate your average monthly payroll based on your number of employees. And then the software will do this calculation for you. So it'll take this average monthly payroll total times the appropriate multiplier, depending on your NAICS code, to arrive at the total loan amount or the eligible loan amount. From here, some eligibility questions. These top four, they all have to be answered no in order for the loan to be, or in order for the business and the applicant to be eligible for the program. So please read through those and answer as necessary. The bottom two can be answered either yes or no, but there are some certain circumstances. So the first one is all of the employees included in the calculation to determine the average monthly payroll are residents of the United States. If they're not, the compensation paid to those individuals cannot be included in the average monthly payroll cost. They have to be excluded. And then the SBA has certain requirements for businesses that are franchises and they have a franchise, an approved franchise directory. Instead of having to look that up and know that the franchise codes, very much like the address and the NAICS lookup, there's a lookup here as well. So if you just start typing, you can select the appropriate one and then it will fill in the franchise code for you. The next thing is the documentation, and if you remember back on the main PPP page on our website, we have a list of the required documentation. If you obtained your first PPP loan through us, and as Dave mentioned, you have the choice of either using the 2019 or 2020 payroll to determine the loan amount for your second draw loan. So if you received your PPP loan through us and we already have your 2019 information on file, you do not need to provide that same documentation again. We already have that on file. We verified the loan amount the first time. The only documentation that we would require is the financial statements or some type of documentation that's going to substantiate that 25% decline in revenue that is showing you as eligible to participate in a second draw loan. One of the things that the SBA came out, I think it was early last week, after the program opened, is an SBA requirement that you have to sign and date the first page of the financial statement and then initial any remaining pages, certifying that the financial statements are true and accurate and they demonstrate that 25% reduction in revenue. So if you log in here and you're coming through the application, you get to this documentation tab and it's asking for the identification, the articles of organization, and you're already an existing ICB customer, ICB borrower. We have all that information on file. You can ignore these and you do not have to provide them. We would just need the payroll documentation and the revenue documentation. And if you obtained your first PPP loan and are using the same 2019 numbers, you do not need to provide the payroll information. So with that, you would upload your documents very much like we do on the forgiveness application. Otherwise, there's a drop down for the document type. You can give it a name and then the choose file button, just like you're attaching a file to an email. Once that's been completed, you would come to the summary tab and it will look through here and search for any errors that may pop up. So because I was clicking through fields and turning on certain data fields and turning off others, it cleared out some of that information, but the goal would be where it says no missing items and you're ready to proceed. If there's any issues that'll pop up here, you can click on this hyperlink and it will take you directly to directly to the issue that needs to be corrected. So in this case, it cleared out my name. And you can either use the next button or the save application button in the upper right-hand corner to save and move on through the process. So once you have, just get through this quickly. So once you get through that process, because that is a fictitious loan amount, it's going to give me this error, but you'll be able to use that validation button to make sure your loan amount, your loan number is correct. Who's ever going to sign the application would come and fill in their information. We are requiring proof of identification. So a driver's license is going to be the most common. You'd enter your driver's license number, the state it was issued by, and it's just something that we're requiring, making sure it's the right person that's applying for the loan app. And then you have the option of choosing your preferred banker who you work with on a normal basis. With that, that is the loan application process kind of in a nutshell. And from here, I think we can turn it over to questions.
Say one thing, Carl, do you want to just clarify what happens when they hit the send button? What happens next?
Yes, thank you, Dave. So once you hit the submit button, it comes into a queue, and we have a team of people that are working through there throughout the day to process the applications, reviewing, making sure the applied for loan amount is eligible based on the documentation that we have on file. And we'll work with you to correct any issues that we see or any items that may have been missed in order to have a complete file before we send it on to the SBA. From that process, it has been taking, I'd say, 2 to 3 days for the SBA to issue an approval. Back in April, when we were originally doing these loans, we were typing them in manually. We would hit the submit button, and SBA would issue an authorization right then and there. This time around, they're doing a lot more due diligence and cross-checking the government databases, making sure that EINs are correct, making sure that the business has been in operation prior to February 15th, 2020, that they're not on any of the lists that the government would preclude them from participating in the program. So it is a little bit more of a drawn out process to obtain the SBA approval than it was back in April.
All right, ready for some questions? We've got this one, I think, ran out of characters at the end, so I will try to finish it off. I have a business with split profit centers. Part of the business is a restaurant. Is there a provision to split payroll costs from the regular business and restaurant to be able to use 3.5% for the restaurant labor and 2.5% for the regular portion of business?
So the payroll is going to be based on the tax paying ID. So if everything is tied under one borrower entity, that's how you determine your monthly payroll amount. There are some provisions based on where that split is going to occur, on whether you can, which NAICS code you use, and that will determine the 2.5 or the 3.5 times amount. So if that would apply to you, please reach out to your banker, and we'll get you in contact with the appropriate credit team member, and we will get that handled.
So just to clarify, I think it'd be fair to say that you're going to end up with one NAICS number that's going to determine it's either going to be 3.5 times or 2.5 times. You're not going to be able to split that up and have part of your business based on 2.5 and part of your business based on 3.5.
Correct. It will not be a pro rata.
Correct.
Okay. Next one, my business is a 2-member LLC with 1 additional employee. In addition to the wages paid to the employee, are wages paid to the LLC members also included in the eligible loan amount calculation?
This comes down to how the entity is taxed and what tax form they file on. So if they are an LLC that's taxed as a partnership and they file on a 1065 tax form, the amount that the partners are going to be eligible for is based on the K1 information. So the guaranteed payments or any distributions do not get factored into the calculation. It's based on the net self-employment income that's reported on the K1. There is a section on that document that I referenced on our webpage on how to calculate the maximum loan amount. There is a section that pertains to partnerships.
Okay. Next question. If we have two owners at 50%, do you have to list both of them?
Yes, the SBA does require that you list everyone who is more than 20%.
Okay. And if the owner lists 3 separate businesses, do all 3 have to be listed here if the businesses are not linked to each other? The first time around, each business had its own PPP application.
So each tax-paying, each PPP application will be based on the tax ID. So if you have 3 businesses that have 3 separate tax IDs, they have 3 separate pools of employees, they would apply separately. On that affiliated business section, the SBA does require that you list the affiliates. It doesn't really factor into the loan calculation, but it is a required field by the SBA.
Okay. Do your payroll numbers have to be for the same quarter that we are using for the PPP loan application, or can you use a different payroll quarter?
So it's really 2 separate calculations. So the quarter or the annual test is to determine the reduction in revenue to make sure that the business is eligible to participate in a second draw PPP loan. The payroll that is used can be either 2019 or 2020, and it's the average monthly payroll cost, and that determines the loan amount. So the revenue, as Dave mentioned, the gross receipts, the revenue, the income, or other income, the interest, dividend, that sort of thing. That's the test to make sure that they're eligible to be included in a second draw loan.
All right, next question. There was a provision last time based on the number of full-time employees you have and keeping those employees. Is that a factor this time around?
I believe that's referring to the forgiveness. At this time, I have not seen any guidance published on the forgiveness of the second draw loans. If it is the same as the first draw loans, you do have to maintain your FTE count in order to achieve 100% forgiveness. There are some certain circumstances. If you fired employees for cause or they left voluntarily, that does not count against the FTE reduction. But if it was like a layoff due to a slowdown in the business, that would apply. But we have not seen any forgiveness guidance published for second draw loans that I've seen.
There is something in the guidance that comes from the old rules that implies that still is in effect for this round. But like you say, we're expecting more clear guidance if they're going to differ at all from the last time around. We haven't seen anything there.
All right, and one more. I still need to open an account with your bank. How long will it take to open my account and apply for the loan? Do you have any recommendations for expediting the process?
Dave, do you want to take that one?
Sure. Here's our stated position on that. We first of all, if you are, we have said this program like we did the first time around, we want to, our current customers are where we're focusing initially. And if you're not a customer yet, we need you to be talking to one of our bankers. And we have said that if you're in the process of becoming a customer, so in other words, you've been talking to us, you want to come on board, and you're going to become a customer, we will make exceptions in those cases on a case-by-case basis. But if you're out in San Diego, California, and caught this webinar on our website, and you want to, nobody out there is doing PPP right now, that's not where we're focusing our initial attention. We want to make sure that we can take good care of our current customers, but we will make exceptions for people that are in the process of becoming a customer. So in terms of expediting it, I would look for that drop down, talk to a banker. Hopefully you've been talking to that person already, and we'll get you, we'll get that account open and keep it moving. As you can see through the demonstration that Carl just went through, the process is fairly slick. This time around, it's really gone well. Our customers that have already applied have commented on how easy and intuitive the system is. So in terms of expediting it, and getting us the information that we need, and that those uploaded documents is going to be important, because the back and forth with our banker staff to our analyst staff to get the right documents in place can be time consuming. But I guess that would be my guidance to you for right now.
Melissa, I think the last question here, I know we're running out of time. Looks like the reduction in revenue test, any 3 consecutive months, or is it a calendar quarter? The SBA has come out and clarified that it is a calendar quarter regardless of when your fiscal year falls. So if you have a fiscal year that ends in a time frame other than December 31st, it is still based on the calendar quarters.
And to note, I think Melissa's probably preparing to say this, but we are going to take these questions and provide the answers to them, and any that came in. I think we got one that we didn't get a chance to answer. We'll make sure that the answers to all these questions are on our website. So and there are some that we got in advance that we haven't had a chance to answer yet. We will have answers on our website. So look for those in case your question didn't get answered yet.
Dave is right. I was just going to say that. Our PPP webpage on our website is kind of the go-to place for any information you need. We'll put the video up there, the answers to the questions that you submitted earlier and that we didn't get to today. And that's kind of your one-stop shop. I think there's links there where you can contact your banker also if you have any questions. So with that, we just want to thank you for joining us today. And thank you to our speakers also. Have a good afternoon.
I see we still have a few people logged in. I have to hop on another call, so I'm going to say goodbye, but thanks for everything, Melissa and Carl.
Sure, thank you guys. I'll get those questions, those final ones that came in, sent over your way. And then, yeah, once you have them answered, I'll get them up on the websites and the video too.
Sounds good.
I
Take
should
care.
stop this.